Okay, let's get in some fundamental perspective as well on the show. Ritu Arora with us right now. Ritu, exuberant markets. What do you think we're cheering in terms of, some of the factors such as monsoon, earnings season, what's going on globally as well?
Thanks for having me on the show. Clearly the markets have been happy, and there are a lot of expectations building around, of course, good distribution and monsoon in line with expectations, in fact ahead of expectations. GST bill is expected to be passed this monsoon session, which is very positive. And we as an economy seem to be relatively coming back on track. The economic fundamentals seem to be falling in place increasingly so. And the expectation is that corporate results will also start showing improvement from this quarter. So despite the global turbulence, fear of currency turmoil, Indian markets are finding the strength. But I should mention here that 18.5 times forward, we are not an inexpensive market, and one needs to be careful, though I remain bullish long term.
So given that you remain fairly bullish, where, Ritu, is it that you would advise parking money in these markets?
I am very bullish on the domestic economy. It has been an economy which has been delivering growth subpar for last couple of years. The fact that economic fundamentals are falling in place, and most of the good news is around domestic growth. I'm quite focused on sectors, stocks which are linked with India's story and India growth story, be it in all aspects, be it infrastructure, cap goods, banking, automobiles, consumer durables. So all these sectors which are likely to benefit from 7th pay commission, good monsoon, GST bill are the sectors I am focused on. I'd like to be away from export oriented or currency sensitive sectors.
Right. What about this mid-cap rally which is taking place, Ritu? Does it seem like that it's now time perhaps to tread with caution and start, profit taking in pockets like realty, which have been on a tear in the last 3 months or so, or for that matter, some of the tea as well as sugar names which have ridden up pretty high, or even some of the NBFCs?
I agree, there has been a significant rally, but it's very difficult to say where there's froth and where there's still some upside left. And there it is very important to do a bottom-up analysis of stocks. It's really not a top-down market where you start investing in these sectors which have run up or in anticipation of a rally. It is very important to base the decision on the fundamentals, on earnings. So the earnings visibility is the only anchor in this market that you can see and you can measure. So I'm very focused on domestic stories with good earnings visibility or expectation of good corporate earnings over the next couple of quarters. And that is, the valuation is the yardstick I'm using to evaluate my investment decisions.
Ritu, let's talk about the outlook when it comes to the banking space, particularly some of the PSU banking stocks. Of course, today there's a news trigger with respect to the recapitalization. How do you see this as a game changer, and what's the expectations from the earnings?
For the last many years, and also I've shared on your show, I have been significantly overweight private sector banks and have been underweight public sector banks. But I'd like to believe that probably it is, I'm getting increasingly positive, and it's probably time to reevaluate the weights between private sector and public sector banks. I believe the bad news probably is built in to the public sector stocks, and hopefully over the next couple of quarters we'll start seeing a repair and improvement in the balance sheets, in capitalization. There is a lot of talk around mergers. So I'm getting increasingly positive, and it might be a good time to recalibrate allocation between private and public sector banks.
So what would you stick with? Would it be larger PSUs or even smaller ones? Because one has seen a significant rally in the last fortnight or so, especially since the news came about that PSBs are going to get the second tranche of money, and bank recapitalization will happen very soon, in fact this week itself.
I would rather not differentiate as a cap, large cap or small cap, but on the strength of balance sheets. And as you know, they're all stressed balance sheets. So it's very important to discern the ones which will probably recover sooner rather than others. And hence, there are also some attractive mid-cap PSU banks which I like investing in. And I wouldn't be led by just their capitalization.
You know, when it comes to earnings, the consensus is that real estate companies might continue to report a weak quarter, largely on account of liquidity, which continues to remain constrained. What's the view?
Real estate sector is a sector which I don't particularly like for quality of management, the quality of balance sheets, etc. And I agree with your analysis that possibly the demand scenario is likely to remain lackluster over the next couple of quarters. And so I wouldn't add weight. I would in fact be a little away from real estate sector.
What about infrastructure though? While real estate may be a little sticky, but or rather risky, I should say, infrastructure has fundamentals as well as technicals alike going for it.
Yes, infrastructure cap goods, one needs to selectively add weight. We have been adding weight over last many quarters. I think it is a good time, since we are focusing on India domestic growth recovery as a theme. There would be plays, of course, again there some stocks have really run up ahead of their fundamentals, so one needs to be careful. But it is definitely a sector one needs to have a good weightage in.
Give us a sense as to what you make of, the kind of move that we're seeing in crude oil prices and how this is going to impact some of the upstream oil companies when it comes to the earnings.
Of course, we as a country remain highly sensitive to crude oil, and as an economy and of course many companies. I personally have preferred oil marketing companies over the last couple of quarters, and that has played out pretty well for me. Upstream oil companies probably will continue to be driven a fair bit by the crude oil price movement, which will be, as a global factor, continue to oscillate a bit, and hence I would be a bit wary of adding weight there.
Okay, Ritu, good chatting with you. Thanks much for taking the time out and speaking with us today.
Thank you.
That's the view coming in from Ritu Arora. Let's take a quick break with news that the market